Hi everyone, it's Lou Joseph with Remax Preferred Realty. Today I'm going to talk about the rental market report. Now this was released in 2020. We will have one coming in the next few months here for 2021. But the 2020 report goes over 2019. So it's a little bit behind, but we'll catch up when the next report comes out. I'll definitely do a video on that. I'm just going to scroll through this report for you and read a little bit about it. So the overall vacancy rate in Windsor, Essex County is 2.9% as of 2019. Now we see the lightly shaded area below CMA, similar and above. So where we see the dark blue is where it might be a little above 2.9%. So you see Central and East Inner Windsor. So that would be like the downtown, Ford City, that general area there where you might see a little bit higher vacancy rates. And then in the remaining area out here, this would be, everywhere else, Amherstburg, and, you'd have South Windsor, LaSalle, Lakeshore. They would have a lower vacancy. This is more owner occupied residential properties that would be there, where in these areas here, downtown and Ford City, it's a lower owner occupancy rate. So that would most likely be the reason maybe for the little bit higher vacancy. But if we break it down, actually, before we go through that, the average rent is $870 a month. So this was up 7.5% from the previous year. So that's a big jump in rent. Now, of course, you can't raise your rents 7.5% on your tenants, but you can set the rents at the current market rents if you had a vacant unit. So the attractive thing about buying rental property as of this year and last year would be to get a vacant rental property so that you can set the rents. If it's not vacant, you may have to keep the tenants. I know that there's some landlords going around different ways to try to evict the tenants and so forth. But to do it legally, you have to set the rents when they're vacant today at the market rents. Now, if we look at the primary rental markets, we have the bachelor, 1 bedroom, 2 bedroom, and 3 bedrooms or more. So we see with the bachelor properties, the bachelor units. So that would basically be, you'd have the living room, the dining room, or living room eating area, living room, dining room, all just one open area. So there's not a separate bedroom. It's just all one open area. You throw in a bed in there and you got a bachelor unit. So the average rent for those units is $683 a month. 1 bedroom units, the vacancy rate is 3%, so a little bit lower. And those rents average at $831 a month. Now we have the 2 bedroom, which is what most rentals would categorize themselves in, a 2 bedroom. That's why we always kind of look at the 2 bedroom as a standard rental model. Now we have 2.5% as the vacancy rate there, and the average rent's at $949 a month. Now we go into 3 bedrooms and more, and that average rent is $1,130 a month. Now that's the average. I know that if you look online, you'll see all kinds of prices, and you'll see $1,500 a month for a 3 bedroom home. You start seeing even above that. But we're looking at the average. We're taking into account all properties in the lower areas and in the higher areas. So over here it says the vacancy rate held steadily this year as growth in supply was enough to satisfy stronger rental demand. So this was 2019 they're talking about. And let's go over some of these charts here. So Windsor CMA annual population growth. This is a very important chart to look at whether you're deciding to invest in a city or not. So we had a peak, before 2006, the market was pretty strong, 2003 to 2006. And at that point, we started seeing some weakness in the dollar We got to a point where our dollar was actually stronger than US dollar. So that's not a good thing. That's not a good thing for Windsor, especially when the US dollar is weak. We want a strong US dollar. It helps our labor markets. It helps manufacturing here in Windsor. So, but we see here that population growth started to decline, and it declined all the way into 2008. And that was, of course, our recession, right? You seen, you probably, I don't know if you're old enough to live through that recession and actually acknowledge it. But me being, 42 years old, that was when I had my real estate license and I saw firsthand and I was involved in the market. So I definitely remember what it was like and some of the key indicators of that kind of market. So we see that population actually decreased in Windsor. Okay, so we see a negative 0.5% going to a negative percent. And then as we got out of that, we had a recovery. And then we went into 2010 where we started seeing a positive net migration. So we see here that our migration, people moving into the city, started to increase up to 1% a year. And this is the time, if you got into the market, if you got into buying rentals, 2010, 11, 12 would have been the ideal years to actually get a deal, get value. Today's market, some might say it's overvalued, but that remains to be seen as we go forward in the future. We got to see what happens into the future. It could be overvalued, could be not, right? Depending on where we go from here. But as we see here, this would have been a key point here. Vacancies were just declining from these highs in 2008. And so that would have been ideal. So that would have been ideal buying area. Then we saw the market kind of go a little sideways here. And then when US dollar started to really increase against the Canadian dollar, we saw it in 2015 when this started happening. And then migration started picking up again. Okay. So we are still in an upward trend. Looks like it's kind of a little topping off, but it's hard to say. We can't predict the future here, but this is what we're seeing. Okay, so I'll read through some of the highlights. It says the primary apartment vacancy rate in 2019 remained unchanged at 2.9% from the previous year. Supply of purpose-built rental apartments kept pace with growing demand, and the match sample average two-bedroom apartment rent increase at 7.7% in 2019 was the strongest in nearly 30 years. So 30 years, okay? Like, that's a long time, right? So this is the strongest, 2019 was the strongest you've seen a rent increase in 30 years, okay? So are you buying at a low or are you buying at a high, And the prices are factoring in that increase. So you're not buying these properties at what rents were like 10 years ago. You're getting them at what they're valued at with these current rents. So you got to keep that in mind. So if you're buying today, you have to have the intention of holding long-term, I feel. I know that might be counterintuitive. Flippers want to flip. You want to buy a property and sell in 3 years for a plus. But the same mentality in rental properties today is the same mentality as buying Bitcoin and buying Tesla and buying all the things that are hot, right? So when things are hot and everybody knows about it, people are buying it. And when you do it that way, when you do it that way, you have to hold on for the long term, right? If you're buying Bitcoin today or you're buying Tesla today, next month, 6 months from now, the market may not be a double, right? So you may have to hold on to that asset. So what I'm trying to say here is I know everybody's gun-ho buying real estate in Windsor, but have that in mind, and also leverage. Have that in mind too. Like, do you want to be leveraged in 5 to 10 properties at 80% loan to value at this point in time, or do you want to start peeling away at the debt, start paying down some debt at this point forward? You definitely want to have some protection. Okay, so like basically you look at this chart here, and the population growth started to increase in 2010 to 2012. I would say maybe at that point you would have leveraged yourself to the hilt and you would have came out the other side as a super winner, right? So I don't know if over leveraging at this point would be the key in rental property. I could be wrong, and I can't predict the future. We have very low vacancy. We have very low vacancy rates. We have very low interest rates. What if those two numbers do a reversal? What if vacancies go up? And what if interest rates go up? And what if US dollar goes down? That could be a problem. So you always want to have yourself positioned for any kind of future issues, right? Not saying real estate's not a good investment. I just think that you have to keep a long-term picture in mind. Anybody that bought properties back here in 2005, 6, and 7, you know, if they sold in 2010, they would have lost, right? But if they held on for the 10-year average there, they would have got out ahead. Or if they would have held for 15 years, they would have got out ahead. So that's the long term is the winner, right? It's like timing stocks. You get into a stock at the top of a market, and then it takes a dive, and you sell for a loss, and then you see 10 years later you would have tripled your money. Okay, so now the next chart we're going to look at is migration. This is very important. So we see that they're categorized as intra-provincial, interprovincial, non-permanent, and immigrants. So a big key here is like immigrants, right? Like we saw all these immigrants coming into Windsor, and it's a great time to buy rental property. There's subsidies for these immigrants, and you can get some rent, right? You can guaranteed rent because they're getting some subsidies and so forth. So we see that in 2006 and 7, we had some migration or some immigrants here, and then we had a couple of years here where it didn't really affect our city as much. And over here, we saw a little bit in here, but where we saw a lot of immigrant growth is back here in 2005 and 16. Like this was a big immigrant growth, and also 17 to 18, we had some immigrant growth here. So that's a positive. Like you're coming from another country and you're going to come into Canada, and Canada, you know, is a free country, and we have lots of social programs. It's very appealing, you know, and the government's going to help you out to come here. Now, immigrants as a whole, like when you have a lot of migration to a country, at first it may seem like a little bit of a burden, but eventually that's what you want is for a country to grow its population base and to have its working base grow as well. So that's a positive. Now we look at non-permanent. So non-permanent, we can say that those are people that are not staying in Windsor, right? Those are students, especially overseas students that are just coming here for schooling, and maybe they plan to stay, maybe not. Maybe workers that are coming in for temporary work. So this is non-permanent. So we see in 2012 and 13, we had a huge population that was non-permanent. And over here, 2017, 18, we had a huge influx of non-permanent growth. So the population growth, the non-permanent, I don't know if I would count that as a good key indicator. Like it would be good, I guess, for your student rentals. But what can we convert some of these non-permanent to permanent residents? That's the question, right? And then of course you see intra-provincial and interprovincial. So that also takes up a bit of the last few years here. So if we talk about, if I just read just a quick little paragraph here. So as the economic situation in Windsor improved, inter-provincial flows turned positive again. However, the main contributors was non-permanent residents whose numbers last year reached unprecedented levels and exceeded all other migration types combined. The fact that nearly all the net increase in non-permanent residents last year were aged 15 to 24 suggests that most of them were international students. The fact that student households tend to share residential or rental accommodations may partially explain why 2- and 3-bedroom apartment vacancy rates were lower compared to the smaller apartment types. So that's just explaining again the non-permanent residents. So we have this huge influx of non-permanent residents, and we have a huge increase in the average rents at 7.7%. So those are two things that are just record breaking for us in Windsor. And basically, the rest of the report is just saying how there's stronger additions to rental supply. So now that we have lower vacancy, we're seeing some new multifamily properties pop up, getting built and being absorbed, taking some of that demand for rent, off the table. So we're holding, this vacancy, very stable vacancy rate because of new properties coming up and being built and the renters absorbing them. So record high rent, rent increase. Rent growth has been accelerating in Windsor over the recent years. The increase in average rent for a two-bedroom apartment in structures that were common to the 2018 and 2019 survey was 7.7%, up from 4.3% a year prior. This was the strongest annual increase since CMHC has been tracking the statistics and was well above the 1.8% provincial guideline for 2019. So the guideline is 1.8% for rents to increase. So it's way above that. And we see here a change in average rents for two-bedroom apartments. So this is the percentage here as far as an increase or decrease. So we see, because we had that recession there, 2009, we actually seen a decrease in the rents. So we're looking at almost a 2% decrease. So during that time, you'd have to maybe work with, it was more of a tenants market. So you'd have to be working with the tenants, with rents, giving them better deal with rents, maybe paying for their gas or their utilities. So there's a lot of concessions that tenants can ask for in that kind of market because of the higher vacancy rate, right? And the very low demand for rentals. But now, as we see here, we see that rents have increased. So maybe you could have bought at the low times in 2011 to 13, and you have some tenants in there. But if you set their rents at those markets, at those market rents at that time, you can, and they're really good tenants, and they're paying, and they're not, they're paying, they're keeping the property up. And you see you're up now in 2019, where the rents are basically a lot higher than you set them over here. You just can't really kick those people out, and you can't raise their rents to the current market rents. So there's like hope for these buyers of rental properties, that hope that there's some turnaround, hope that your tenants buy some property and they can have the vacant units, so they can set the rents at the market rents that they are today. So very, very, tricky. You buy low, you have the rents set low. Now your property is valued a lot higher, but you can't raise the rents to current market rents. So what do you hope for it to be vacant? You hope that you can evict them somehow. Like that's a wrong way of thinking, right? Like you don't want to get rid of like great people that are paying rent. You don't put them on the street, right? So that's a dilemma, right? So you're buying high today, but you're charging high rents. You just don't want to be in a situation where rents do this, where they go into negative territory, right? And the vacancies go up. And the rest of the article explains a little bit more about, the vacancies amongst certain age groups and so forth. That's a little more detail, right? So that concludes this report here. Now you can go to CMHC's website if you want to read this report in detail. Or if you want, you can just send me a quick email and I can forward this over to you. But definitely, this is for the year 2019, and definitely something to look over to. Like if you want to buy rental property, I'll be going over the new report when it comes out this year. And I hope you got some kind of information from this video today. And if you're looking for property, buy or sell, residential, multifamily, or commercial, just give me a call anytime. It's 519-817-0887, and I'll put my email in the description below. Thanks a lot and have a great day.